This is our Forex blog for March 4th, 2011. And like most days, you really want to look and see which currencies have the strongest weekly and monthly trends. And then if today the real-time trends match the longer-term trends, you want to trade those pairs. The yen has the weakest daily, weekly, and monthly trend, and for most of today until about 8:30 was consistently extremely weak. The euro has the strongest weekly and monthly trend. The CAD's pretty strong, and also the Swiss, obviously. So you want to buy the euro yen, you want to buy the Swiss yen, and you want to buy, when there's real-time strength in the CAD, you want to buy the CAD yen from 4 to 9. So looking at the euro yen, you can see today started off with a very narrow range pattern, and our breakouts when you're in the direction of the longer term trend tend to be very high probability. You want to buy the high of that when it's above the hourly. And this one kind of took off and came back down. I would have probably got stopped out of this with a tiny loss. You want to get back in again, and this is your first profit target, second, and usually the upper containment bands are your maximum profit. This one just kind of drifted up. You might have exited half your trade there and just kind of trailed the stop up and got out of the second half up there at 50. The CAD yen also had a very narrow range pattern right above a fib level retracement level, which makes this an even higher probability buy once you find it had support right here. You might have also got into a trade right here, lost 6 or 7 pips, got back in again when it went back above the hourly, and this again just kind of had a slow drift up. I probably would have exited half my trade here at the previous week's high, put my stop right underneath the sideways range, and most of the time the market will make one more wave up, and the fib targets are phenomenal profit targets. This one went above the first one, stalled here at the previous month's high. Excellent place to get out of the whole trade. And it did have kind of a pullback before it, shot back up again. You notice on the way up here, it didn't really have a whole lot of statistical strength. If you want to look for aggressive counter trends trades way above the upper containment band when it went up without this much momentum, it's a pretty high probability type trade, for a quick 10 to 30 pip counter trend move. And here's the Swiss yen. Strong Swiss, weak yen. This is a phenomenal trade. The market spent a few hours right underneath the hourly. Usually when the price is underneath the hourly, it trends down, but when it doesn't, it tells you something. There's buyers right at the 10-day moving average right here. It never really penetrated at more than 2 pips. And then when it broke out right here, you want to get in. Here's your first profit target, his second, and you can see, that's a nice 25 pip move. I would have probably got out of most of my trade here, but this had a lot of real-time statistical strength that some of the other pairs we just looked at didn't. So you just trail your stop up, and at the upper containment band, pretty decent place to get out of that trade. Again, draw your fibs on the first wave. Usually they don't make more than a 2-wave move. So when it goes to the first fib level, I probably would have got out of my whole trade right here. Just because it was actually kind of losing some of its momentum. But if you used our trailing stop, it would have probably got you out somewhere up here at 90. Now, after a currency is weak for so long, usually there, it has a little bit of a counter trend pullback. You can usually expect an hour to 3 hours of strength. So after this was weak, really for about 8 hours, and you had some real strength right here at 9, you could have considered buying the yen against whatever the weakest pair was at the time. At the time, the pound was, weak. The euro wasn't. The Australian also was weak, and so you could have considered some counter trend trades in the pound yen, and also trading in the Australian yen is a decent deal because the weekly and monthly trend are already down in this particular pair, unlike the pound where the weekly and monthly trend's up. Let's look at the Australian yen first, right around 9. You can see this one already made a pretty decent size move down. Our trend intensity pro shows an extreme weakness right here. And usually when a currency breaks underneath the hourly, it will do a retest there. Very high probability trade. I took an Australian dollar trade right about this time and made like 2 or 3 pips of it. It really made a mistake not shorting this one instead. Not having my currency meter visible and on a hidden layer, I really screwed this one up. This was a beautiful trade that just, fell nicely and smoothly for 20 or 30 pips. Notice how almost to the pip it hit the 1.382 fib target, and it also made a lower low with less weakness than it had before. So the monthly pivot's right there. very high probability place to exit the trade. It's made a two big wave pullback with less momentum, and it's at major support right near the lower containment bands, our trading zones, and monthly pivot. And when it pulled back here after this extreme weakness, you might have also considered going short on here. You might have lost on the first trade. Second one's pulling back, and you probably want to exit that right now. That would have given you about 14 pips. The pound yen, a little bit less, or a little bit more risky short at the time because it was above the hourly, unlike the other one which was underneath the hourly. But coming up to 9, the pound was showing some weakness, the yen some strength. When it kind of went sideways right here, pretty decent place to go short, and especially with a tick chart, you could have taken a early entry in this with even less risk than that. You can see this is kind of going sideways right here. It's a little bit higher probability. You can see on the tick chart it tried to go higher. You have a little mini head and shoulders pattern right here, and then as it's coming down it just goes sideways, breaks underneath the hourly, and because the longer term trend on this is up, I wouldn't be so aggressive in holding it. Fib targets, usually when it breaks below the first one, it's going to stall at the second one. We have a counter trend buy right there, and this is probably where you would have wanted to exit, somewhere around 96. So you've got a nice little 40 pip move there, and because of the extreme weakness, when it comes back up and retests the hourly, you have the previous day's high and the monthly pivot level there. Right above it you have the weekly R1. There's lots of areas here that there's likely to be some selling. When it can't get above there and you have confirmation that there's some selling, pretty decent place to go short right here, and it comes right down to our trading zone with less momentum. Again, nice little 30 pip counter trend trade in about 20 minutes. It doesn't get any better than that to make that kind of pips in such a short amount of time. The New Zealand also was extremely weak today. You could have traded that against the dollar, you could have traded that against the CAD, and also the Swiss. Most of us, in fact, I don't even know if I've taken a New Zealand Swiss trade, but looking at the chart, one's weak, the other one's strong. Nice continuous trend down, a lot of pretty decent intensity at times. When it breaks underneath the previous day's low and kind of goes sideways for a bit, that's a pretty safe trade. It went your way, then a little bit against you. Your stop should be right above the previous day's low, and then it came down and hit the weekly S1 at the lower band. Pretty decent weakness, but usually price doesn't go beyond the containment bands unless it has extreme strength at the 20 level or higher. So you would have made about 20 pips on that trade. Came up, kind of double topped right here. Again, notice pretty significant strength the first time, nothing at all the second time, and on a tick chart, really decent trade there. Again, it went sideways here for 30 minutes. I would have probably exited here and not stayed with the extra 30 pips down. But if you hung with it when it's underneath the lower band and doesn't have extreme strength, very likely reversal area. So the currency meter is definitely the highest probability way of finding the trades you should be in, and I'm going to enhance this even more by using our new FX Momentum Pro and adding it to it. We'll have the IntelliTrend on the top, and on each individual currency see how the dollar is moving against all the pairs on a bar by bar basis. If you see a currency like the yen having some weakness, and then on about 15-20 minutes right here it's going up, the other tool will let you see in real time statistically how intense is that up move. If it's going up with less than average momentum, then you're looking and hoping and expecting most times the previous trend to continue. So kind of anticipating a drop again in the yen, and at the same time, is the euro here coming up to 4 o'clock? It's still strong. If you see in real time bar by bar, all the euro pairs are going up or they're coming down with very little momentum. You want to look around that 4 o'clock time, 3:40 actually, to be buying the euro yen. And here's the tick chart with the euro yen. It actually didn't have that much volatility at the time, so it wouldn't have shown it as too much of a risk to buy the pullback. Here's the 3:30. This one pulls back to the hourly right here, and then started to go back up. You might have bought right here, anticipating a break of the high, and once you did, just kind of smoothly went up. If you get into some trades at a lower price point by buying, you can have a smaller risk by having your stop right underneath the low, you can trade larger lots that way. If you wait for the high to get broken out, you have a 5 or 6 pip wider stop, and you need to cut your trading size down accordingly.